Welcome back. Here we are talking about installment agreements, and there's quite a few different options when you come to it. So, the first one is called a streamlined installment agreement, and this is what we've been talking about, where you just go in and you ask for, hey, can I qualify for this program or this program? It's a specific program where you don't present your financial information to the IRS. And why might you not want to do that? If you have assets that you don't want to use to pay off your tax debt, if you have really high income but you don't want to be paying $2,000-3,000 a month, or if you just want to need some breathing time and need to pay off other debts, there's plenty of debts that the IRS won't consider. So they made this. This is a huge improvement, and it's been over the last 6, 7, 8 years that they've come in and introduced different types of installment agreements to expedite, making it easier to deal with the IRS. So we mentioned the first one under 25,000, no questions asked. They'll set you up on it. Under 50,000, again, you use the rule of 72. You just divide that out, pad an extra $50 to $100 to make sure that you're covering interest and penalties. And when you call them, you can ask what's the lowest I can pay and still do the streamlined installment agreement. Now, if it's over 25,000 but under 50, they also want what's called a 433D signed. And so that is a simple form. It's a one-page form. It comes off in 3 copies if you download it online, but you only need a complete one page, just the first page. So what it is it's an automatic debit from your bank account. And so the IRS loves these because it just automatically collects the payments until the debt is paid off. And so they prefer these. They give you they charge you less to set up. There's always a setup fee, but I think it's only $43 if you use a direct debit installment agreement. So use that form 433D, and you can go to irs.gov and just type in 433D and download that form. You fill it out and submit it. Make sure that it's signed in the right place, it's dated in the right place. You have to have all the details right on it. And then you have to initial. That's one of the big things people miss. There's a box where you have to initial. So if you have questions about that, give us a call. We'll go over it again, just going over a form. We're not going to charge you for that. And again, that's Hubert Johnson with Guardian Tax Law. And our number is 520-485-7371, or you can find us at guardiantaxlaw.com. So under 50,000, you can, if you do a direct debit with that form, you also avoid the filing of tax liens. Now, the IRS has gotten a little more aggressive lately, where if it's under 50,000, but it's not on a direct debit installment agreement, they will still file tax liens. They don't always, but they often can and often do. If the balance, and here's the key thing, this number I'm talking about, 25, 50,000, it's based on the assessed balance, but not everybody at the IRS knows that. So if you look at the balance without interest and penalties, that's what they should be looking at. But again, the IRS messes that up all the time. And because we set up so many installment agreements, it's usually not worth sitting there and arguing them and explaining to them the technicalities of their own regulations. So if it is over that 50,000 number, they're going to ask for financial information. Now, if it's 50 to 100,000 and you are paying the balance in full within 7 years, they typically will still just follow the rule of 72. Again, there's going to be some extra in there, a couple $100 for interest and penalties on top of that. So you take the total balance divided by 72, and your payment plan is just going to be a little bit more than that, by maybe 100 or 200, depending on how big the balance is. Even up to 120, even sometimes 150,000. If you're going to pay it off within 7 years, they will ask for your financial information. But the reason changes, and this is something to be aware of. When the IRS asks for your financial information, you typically are concerned, are they digging, looking for assets they can levy, looking for bank accounts or how much I earn? As long as you're still trying for that streamlined installment agreement, you should be fine, but you want to make sure that gets set up. correctly, because you are giving giving all your financial information to the IRS. The main reason they still ask for it over 50,000 is to confirm that you can make the payments. If you're broke and you're just setting up something to buy time, the IRS doesn't want to do that. They think you're just going to default right away. They're going to ask questions. How are you going to pay this? What's going on here? And if you don't have something that makes sense, they very well might just deny the installment agreement, even though you're telling them you're going to pay it in full. So again, the IRS deals with defaulted installment agreements all the time, and we're hitting another commercial break. So it's so easy to talk about this, but we'll be right back.